Hello folks, this is Vincent Verga, President of PFS Wealth Management Group with your educational economic update for March 2017. In this month's video, we're going to discuss some of the major headlines that influenced the markets in February and provide you with insight on what these developments could mean for you as an investor. But please stay tuned at the end of this video for our required disclosure statement. Well, February 2017 was a month filled with record highs in the domestic markets. The S&P 500, the NASDAQ both hit a number of new highs last month, while the Dow went on a record-busting streak. In fact, after reaching 20,000 for the first time ever in January, the Dow hit record highs every trading day between February 9th and the 27th. The last time we experienced a string of records like that was back in 1987, and this is the only second time it's happened in the past 120 years. Seeing stocks rise like this can be a very exciting experience, but I want to caution you to not get caught up in the euphoria. Just as emotion has no place in investing when the markets are volatile and challenging, the same rule applies when the markets are growing. So let's dive deeper and review some of the fundamental data that we learned in February to better understand where the economy stands for us. On the labor front, actually, last month gave us somewhat mixed data. We received the January jobs report, which showed that the economy added far more jobs than experts predicted and continued its 76th straight month of growth. But on the other hand, hourly earnings and labor force participation each increased by only a small margin, while unemployment was also up slightly as more people entered the workforce again. Ultimately, the job data released in February indicates that the labor market is growing, but the pace is still not what many people would prefer at this point. Another area where we saw modest growth was in the revised GDP numbers for the fourth quarter of 2016. Each quarter, the Bureau of Economics Analysis calculates the U.S. gross domestic product, which is the total dollar value of everything that people and businesses produced during that period. See, this measurement is a critical indicator of our economy's health, so investors and financial analysts watch its changes very, very closely. And because the Bureau receives updated data after a quarter ends, they release 3 GDP numbers over the course of 3 months: advanced, preliminary, and final. In February, we received the second or preliminary reading of GDP for the fourth quarter of 2016. Consensus was that reading would increase to 2.1% from the 1.9 growth in January's advanced report. But in reality, the readings didn't change and stayed 1.9. For comparison, third quarter GDP came in at 3.5% growth. Rather than indicating that the economy is slowing down, however, just one aspect of GDP contributed the most to the decreased growth: lower net exports at the end of 2016. Trade is integral to our economy, so maintaining a healthy trade balance is key. As the political environment evolves, changes to trade deals could affect the balance and, as a result, our GDP. For now, no one can say what new policies may be on the horizon or if the markets will continue to reach even greater heights. So we will continue to analyze the data and search for the most thorough view of our economic standing. This perspective is the foundation of our support, and we are here to help you find a clearer perspective amid the hype. Well, guess what? That's it for this month's Educational Economic Update. Once again, I'm Vincent Verga, President of PFS Wealth Management Group, signing off for the month of March 2017. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, give us a call at 888-331-2821. We'll be more than happy to talk to you. And by the way, visit our website, pfswealthgroup.com. We've updated it and revised it, and we'd love to get your opinion and thoughts on our website. So watch it, look at it, and send us your feedback. We'll see you next month, ladies and gentlemen. Thank you.